Welcome back. You are tuned into our special show, Quarter se Quarter Tak. We are analyzing, or rather guessing the earnings for this quarter. Of course, we've had two big earnings already out, but lots of them to come over this week and the next couple of weeks. Let's take it to other big sectors now, oil and gas. Stocks have rallied, but can the numbers match up? Varinder will tell us.
Oil and gas will be important sector to watch out for. There will be positive surprises this point of time. Remember, crude has surged nearly 10% quarter-on-quarter basis. Singapore GRMs are at nearly $7 per barrel, which is up nearly 30% on quarter-on-quarter basis. So, which is the fundamental story of this entire sector. Starting with Reliance Industries, expect strong numbers coming in from the company. Quarter 3 GRMs are expected at $11 to $11.5 per barrel, which is up by nearly $1.5 compared to last quarter. OMCs could clearly surprise. Inventory gains is one thing. Of course, the marketing margins have been improving by nearly 10%. Out of the OMCs, IOC could be one possible candidate which could give you a positive surprise. And also watch out for commentary in terms of the dividends, whether that gets increased in this quarter or not. Upstream companies, ONGC steady quarter, growth of nearly 13-14% on a Y&Y. Capacity expansion has been happening in that company. Net realization of anywhere between $50 to $51 per barrel. And gas-based companies, it will be moderation in terms of earnings. If you're watching out for quarter-on-quarter numbers, Petronet may give a negative surprise this point of time because the prices have been moving up. EBITDA is expected to move down by nearly 7%. PAT is expected to move down by nearly 15% for Petronet LNG on a sequential basis. Gas-based companies, IGL, clear there could be more surprise this point of time. Volume expectation is anywhere between 9 to 10%, but the company may surprise by nearly 12 to 13% in terms of volume growth. So for me, if I have to sum it up clearly, surprises could be from IOC and IGL in this earnings season. Moderation expected from Petronet LNG, and stable earnings from Reliance and ONGC from oil and gas space in third quarter.
Oh wow, that's a lot in one breath you covered, Varinder. Sanjiv, straight away to you. What are your bets, oil and gas?
Well, Latha, they've all been outperformers, and we continue to think Reliance is going to be the key, leading the index up to 8600. We have a target of 1250 there as a disclosure. Now, Reliance, definitely the GRMs will surprise on the upside. ONGC has played out wonderfully all the way from 200 and now almost 200x bonus, a 50% upside. We think the pullback in crude should positively impact the upstream companies. OMCs will be in the pink of health as they passed on most of the price hikes. But the surprise actually could be the gas utilities. So GAIL and IGL are our top picks. GAIL, IGL and Reliance. These are three stocks which we are very, very positive of going into 2017.
All right, Sanjiv, thanks for that. Let's quickly get another set, the disowned and unloved set of industrials. Anisha is here to give us a roundup of what to expect. Okay, she also will be speaking about consumer durables, but more importantly, power and infra.
Well, yes, demonetization has impacted the consumer durable space as much, and that is why the likes of Blue Star have mentioned that the secondary sales have been impacted in months of November and December, and that is why they have brought down the yearly guidance as well. In terms of Voltas, the street is expecting a 10% decline in the AC sale. That is because the company mentioned in the month of December, select regions have seen demand going down by as much as 50%. On the flip side, Havells might just surprise us on the upside, given the street is expecting growth of around 1 to 2%, as the sales have been supported by restocking and the hike in the copper prices. On the power space, Power Grid remains completely unscathed by what is happening due to demonetization. A steady earnings is expected from Power Grid. On the other hand, JSW Energy might report a weak quarter, given Vijayanagar plant has been running on low PLF level. From the road sector, we heard the likes of IRB mentioning that the impact of demonetization has not been much in the month of December. However, for Sadbhav, select regions saw the toll decline by as much as in double digits. Lastly, for Larsen & Toubro, order inflow is expected to remain flat on a high base. However, revenue might just grow about 7 to 10%.
Okay, and some of these stocks, thanks Anisha, have rallied, of course, over the last few days. Before I toss it to Dhananjay, let me get one more sector out of the way, metals, and really phenomenal one already. We expect good numbers. Base effect will catch up. The China effect will catch up. Nigel will tell us which companies to watch out for. Nigel.
Well, focusing on ferrous players first, steel prices, yes, they move higher, but remember, raw material costs as well have doubled. For example, coking coal prices has doubled on a sequential basis. Expects a more or less moderate performance coming from Tata Steel. They'll gain because volumes are higher. We know that ferrochrome prices as well have moved up, but part of that benefit will be offset because European steel spreads have contracted. Moving to JSW Steel then, it'll be a rather weak set of numbers coming in from there. They're not integrated, so the EBITDA per ton will slide down to close to around 6,300 rupees on a per ton basis. But expect a strong set of numbers coming in from NMDC. Prices are higher, volumes as well are higher, so watch out for a good setup there. Shifting focus to the base metal pack then, we have seen that prices of all base metals are higher on a year-on-year basis, and watch out for a very good set of numbers coming from Vedanta as well as its subsidiary Hindustan Zinc. Volumes are higher over there, so watch out for a good set of numbers in there. And even Hindalco, aluminium business will drive the numbers, though in copper volumes we could see a bit of a dip.
Okay, Nigel, thanks a lot for that. Dhananjay, first let's discuss industrials. We started to see some rally, in power stocks, a couple of infra stocks as well. Any picks here?
So, as far as industrial is concerned, we look at engineering and capital goods. There is a sort of a base effect that we are facing from last year. BHEL had a very adverse base effect. Base year growth. So there is a sort of a upside as far as capital goods concerned. Revenue growth is something that we are expecting about 10%, but largely driven by the statistical growth that we see for BHEL. But otherwise, other capital goods are actually likely to show a sort of a very moderate growth. The key thing to really look at over here is the order book flows, and I think that will be very critical. Over here, our picks are Cummins, Voltas, and Dynamatics Technology. So I think that's the industrial space for us.
Okay, Dhananjay, just coming back to, let me get Sanjiv in on metals. Sanjiv, 4-bagger Vedanta,
yes,
a 3-bagger Hindalco, a 2-bagger Tata Steel. I mean, is there more juice in any of the metals?
Yes, surely that's the name of the animal, Latha. When they fall, they tumble like 9 pins. And now the resurrection. So from February, 65 rupees Hindalco and Vedanta already doubled. But we are very, very bullish on Hindalco, given that Novelis has turned around, the Canadian dollar is playing positively, and copper prices are seeing huge surge. So I think Hindalco should be the dark horse here. We have a target of 250 for 2017. JSW will be one of the preferred picks on the integration side, and we think 250 rupees on JSW would be our target there, and the third would be Tata Steel. We again think closer to 550 you could get in Tata Steel in 2017. You can add an NMDC here again, which is from a dividend yield stock has now turned around and will actually be seeing a lot of icing on the cake if it technically stays above this 140 level.
Okay. Let's do one thing. Let's take one more break on that note. Still a lot of sectors to cover. We'll do that once we come back.